Asia Pacific markets are off to a calm and cautious start to trading this week as we await news from Geneva and the discussions between China and the US about the future of China-US trade. This is the key issue for markets this week. It's the tariffs that were introduced by the US president that's caused the massive disruption in markets and resolution of the current effective trade embargoes between China and the US would be a very positive step forward for the global economy and for markets. And markets, of course, have roared back to life in anticipation that a deal will be done between China and the US. That's not a certainty, and it may take longer than markets are currently anticipating, but there's no doubt that at the moment, in the absence of any news flow, the default position for markets is positive and pro-growth. And we're not just seeing that in share markets, we're seeing it across the board with bond yields rising, good support for the US dollar and the Australian dollar in a pro-growth stance, and support for commodities, particularly those industrially exposed like oil and copper. So at this stage, quiet trading with a positive tilt. We will see some US inflation data tomorrow night, obviously very important in any scenario, but with the US Federal Reserve on hold as far as interest rates are concerned at the moment, the inflation data could be very important. At this stage, we're still waiting on the other side of that equation, the jobs data, but a low read on inflation will almost certainly lead markets to speculate about further rate cuts and could be a real boost for shares. A number of stocks came under pressure last week, and turning to the charts, you can see that the S&P 500 was down about 0.5% for the week and giving up on some of the gains that we had seen previously. Overall, though, in much better shape than it has been, particularly when the tariffs were first introduced. On Friday night, we did see particular pressure on pharmaceutical stocks after the Trump administration ordered a boost to domestic drug manufacturing and expanded unannounced inspections at foreign manufacturing facilities. And while this might be overall a positive for domestic drug producers, in the short term, the market reaction was quite negative, as you can see from this chart of Eli Lilly and the pressure that came across the pharmaceutical sector, generally speaking. We'll have some big reports this week, both in Hong Kong and in the US. Walmart, one of the key reads this week, and of course Walmart, very important to its shareholders, but also an important read on the health or otherwise of the US consumer. We'll be watching the sales data in particular very closely at Walmart, as we will be when both Tencent and Alibaba also report this week. We'll see how Chinese consumers and US consumers have responded to the changes in the market when we hear from them. And one of the key aspects of Walmart's announcement will be whether or not they provide forward guidance, with a number of sectors, the car manufacturers in particular, pulling all guidance for 2025 in light of the tariff uncertainty. It will be very important for markets if Walmart takes a similar stance and pulls all of its guidance. So plenty to look forward to. In Australia, we also have employment data on Thursday. That will be very important to the RBA stance, and the bounce back in the Australian dollar could see international funds flowing into the Australian market as a more positive currency outlook supports local shares.